How I lost 1000 US dollar trading GBP USD this London session. My name is Your Trades, and I'm going to take you on a journey with all the trades I take, with some educational stuff. So very excited for all the things that are coming in the near future. Definitely stay till the end of this video because I'm going to share some golden nuggets with you, and also I'm going to share with you what I should have done in order to make 2000 US dollar in potential profit instead of losing 1000 US dollar. All right, let's jump in. So currently we are on GBP USD, and I will start on the 4-hour time frame. And there are some very interesting things that we can see on the GBP USD chart. What we can see is that we have some resistance build up over here, and we also had some resistance building up over here. And pre-London, or the Asian session, traded into that so to say resistance zone. On the 15-minute it will become a little bit more clear. Price was stepping up bullish, and within Asia price started to slowly show some bearish price action, doing bearish breaks of structures towards the downside. So my initial thought process was I want to long GU. I was waiting for this low, which also was a support zone, to be taken out to induce a bit more of those sellers to go long in the opposite direction. But then my mind was flooded. I didn't know what happened, but I thought I knew what I was doing, but clearly I made some mistakes. And now, after journaling my trade, analyzing my trade, I see what I did wrong. And what I forgot to do is telling the story of what price is telling me, right? Which is very important. We need to build a narrative around our setups, what makes it a legitimate trade in the end. And there were a few things that I was forgetting here. And I will jump into the 5 minutes to give you guys a little bit of clarity. So I saw price stepping up, leaving this little support area over here, breaking bullish structure, coming down, and taking out this resistance support zone. Right here is the resistance turning into support, and then it turned in resistance again. So after the sweep I just entered on a short position, but I was a little bit early, 1 hour prior to the real London Open, which is 9 a.m. Amsterdam time and 8 a.m. London time. My chart is on Amsterdam time, so don't get that confused. So now I need to understand what really happened and what the story is of what price is telling me. And what we clearly see was price stepping up, creating a trend line down here as well, which will come in play a little bit later into the story. But the story goes like this, the narrative is built like this. If we sweep an Asian high, what kind of traders are coming into the market, right? We have Asian high, Asian low traders who getting into short positions. And this needed to be my first thought process, right? And I was completely disregarding this because I was entering way too early in this short position. So price stepped up, created bullish market structure, which we clearly were in bullish market structure. We had a low, a high, a low, and now a new high. So our 50-minute range is from this low all the way to this high. So selling makes kind of sense, because what I tend to do is I tend to do the opposite of what other traders are doing. And when we are bullish, we often see that price comes down, takes out all those early buyers, wicks it out, and then moves in its initial bullish order flow, so to say. Sorry. So yeah, funny thing. But then I was already in the trade. So let's dive into the 1 minute price action to give a little bit of insight. What was this real story here? The real story is price swept the Asian high and started to move down pretty clean. And this is only giving smart money traders, but also Asian high traders, the illusion that price wants to go lower, right? And this is what I usually take with me in my analysis. but completely disregarded it today. And the thing is, most people, or well, lots of traders, how they see the market is when we take out a high, they think a reversal is incoming. And institutions use those terminologies for traps, to build up traps, to create more sellers in the market for them to be taken out. So, what was the right thing to do here? Right? Well, pretty easy. What I was seeing was price was starting to create some trendline liquidity. Trendline liquidity is very important. Every third touch of a trend line is potential where traders come in. This is a strategy on its own. They combine it with support and resistance. They combine it with all different strategies, and they wait for all the confirmations to be lining up. So when I was seeing this, the best thing to do for me was to close the trade, but I didn't do it. I wasn't taking enough attention to what the chart and price action was really telling me. And what I should have done is waiting for price to show me more inducements. And in the end, that happens. So if we build up this narrative again from a different perspective, and I will delete this trade, or let me put a line in where I entered so I can remember, just put the trade a little bit away. What I should have done was waiting for price to induce more traders. So there was a trend line building up from the underside, first touch, second touch, potential third touch, where, of course, a lot of buyers will come into the market. Then we had something else. We had this area which was a resistance, turned into support, turned in resistance again, broke through it, and definitely showed that support buyers were entering here, right? Support traders were entering longs. It even gave a little bit of a minor bullish break structure. So imagine now even more traders will come into the market. Even smart money traders think, hey, wait, there is a break of structure. We are in the bullish range. Let's enter and let's go for longs, which is not the baddest of all ideas. But what I shouldn't done is waiting for price to take that out. And look at the timing, guys. It's 2 minutes before 9, which is 2 minutes before the London Open. And it induces all those people. So it takes out the trend line, it takes out the support area. And what happens if we sweep a support area? Those support and resistance traders now are turning into breakout traders, right? Price breaks out of a support area and they entering short straight on the sweep for us. The thing is that most of the times, and I would honestly say that 70-80% of the times, it sweeps and it goes in the opposite direction. And that's why I believe that trading support and resistance isn't sustainable. You could be profitable with it for 100% sure, but you have to apply heavy risk management and you have to stick to your rules and be very mechanical in the way you trade, which is a good thing to do. But I do believe in waiting for sweeps and inducement around certain timings. So for me, a London Open, a New York Open are very, very important timings to take the trades, right? Because that's where the real money flows into the market. This is where the institutions are building up liquidity, taking all those traders out, and then move in its initial direction, which in this case was bullish. So imagine that now we have things lining up, right? We have a support area that's getting taken out. We have a trend line that's taken out. So we have already a few confirmations. But then the narrative will be completed even more because we know that Asian high traders are already in short positions and the market is pushing down as well. So we're also breaking bearish market structure over here. People think, hey, this looks nice, continuation. Let's jump in again from this area, which for sure went in. And let me show how detailed this stuff is and how it really works. So we have a little supply of demand area over there, supply, POI, order block, it's all the same. And this is what SMC traders like to see, right? What they like to see is a buildup of liquidity below a POI, price wicks in and start to move bearish. So imagine how many smart money traders will entering from this POI, covering the high, for example. And this is building into the narrative that we can really look for longs right now. So the whole story is completed. Sellers are trapped in the market, buyers are trapped in the market. Now we wait for that little inducement, that little sweep that takes them all out and move in the opposite direction. And that's honestly what happened with price, right? And where was a solid entry? Here. And I would have covered for sure this little support and resistance area with, let's say, 9 pip stop loss, just to be sure, and targeting for a 1 to 2. It's already here. You can even target that higher time frame POI because, well, we all know price loves to trade into POIs, and it surely did. It started to push up, going a little bit sideways for sure right now, but I think price has a high opportunity to just rocket off because who is coming in from POIs? Well, in this case, smart money traders are very, very excited to enter on short positions already. And it has loads to do because it's a strategy on its own. Price comes into a POI, price breaks bearish market structure, now waiting for price to come into a POI. And let's see, right, what do we have? And I'm not too sure if this stuff will really happen. I mean, I don't know, but those obvious points, and find it out for yourself because you will find those certain things time and time again. Look, this is what every smart money trader's dream is. Buildup of liquidity, POI, they put their limits in over here, they stop loss on the high with a 5 pip stop loss, and they will all go for the low, for example, trading high risk to reward trades. This is not, in my opinion, this is how I used to trade it, let's say a year ago, but I switched completely to using more liquidity to my strategy and more building a narrative, a story, and just entering on sweeps because I don't wait for a 1 minute break of structure anymore. I just simply enter, and I do believe that's the way to go for me and for lots of other traders. So if you want to learn more about the way I trade, definitely connect with me on Instagram or on Telegram or TikTok, whatever. I will drop all the links down below. But this is the way you should trade. So could I avoided a loss? Yes. And could I even be in a winning trade? Hell yeah, for sure. And for me, this is why I love doing things wrong now and then. And those losing trades, well, my winning trades are eating up my losing trades. So I'm not too worried about it too much. But it definitely set me straight again. Let me think, let me analyze where did I went wrong. How was the story built up? And yeah, for sure, there was something to learn, what I wanted to share with other people as well. That's why I make this YouTube video in the end. To support me, I would love you guys to hit the subscribe button, push a like, leave a comment if you want anything to know about my strategy, the way I trade. I'm happy to make videos about it and learn you guys way more on the way I trade for sure. So for now, this would be an easy trade on a Friday. You can see the power of this move as well. You can see the fuel that has been taken, all the stop losses, all the whole trap area, which this is a whole trap area. It takes it all out and it moves in its initial direction. And usually I'm in these kind of trades, but sometimes have a losing trade as well. That's for sure. And I do these setups. It's not a 100% guarantee that they work all the time. They work in 60-70% of the time. Depends on the month, depends on the year. Some months are 55% win rate, some months are 70% win rate. Yeah, this is how trading works. We're never sure about what the market will do. It's a coin flip. How many times it will flip in what certain amount of time? Well, we can only find out in time. So yeah, I think this tackles it all. I did took another trade on EU today. This is a little bonus that I want to give you guys. It's a very easy and clean setup. right? We have the Asian session stepping down, and you can see how price came in. Price was dropping towards the downside, but there was one major difference on EU, because EU left this support area with those equal lows. So when I saw that sweep, my alert went off. I was at the barber, alert went off. I just entered the trade, covered the low, this time with a 20 pip stop loss, because I know there is news coming out in anytime soon, within half an hour. So I just want to be safe. I did move my stop loss to this level because, yeah, why should I risk full size when price is going my way? So yeah, definitely have this on the watch to see what it will bring. If it's going to be a stop loss, I'm fine with it. But I think the same as with GU, this is where most of the smart money traders, market structure traders, will come and enter. They wait for a 1 minute push into that area, doing a 1 minute break of structure. Now we have a new little last minute POI. This is where they enter, and what we usually see is price just rocketing off. Again, it's no guarantee, but it happens quite often. So yeah, little bonus, little explanation on my trading style, my strategy. I hope to see you guys even more often with more videos. For now, thanks for watching, and see you guys on the next video. Cheers!